Welcome back, everybody, and here we go. So mortgage rates actually are down, and that has had a significant impact on buyers because it has sparked a lot of activity. So what are the buyers doing? They're going out and buying homes, and I'll tell you, it is interesting because even though we've had a significant influx this week because, well, the vacation trifecta is at a pause. Post July 4th, we see a lot of inventory coming on market. We see a lot of buyers coming on market, and that will go until about the middle of August when we'll put the brakes on and hit our Labor Day weekend, kids getting back in school, last-minute vacations, mindsets are elsewhere. So for sellers, your next 45 days is going to be super, super critical. Actually, it's a little less than that. It's about 30 plus days. So remember that because price is your first impression. Just saying what it is. Second impression will be the home visit and, of course, the pictures online. Let's move on. So if we take a look at what's going on and we see that mortgage rates saw a significant improvement because of the CPI report that came out on Wednesday. Feds were super, super happy about that. And of course, then we've been seeing a very pleasurable reduction in mortgage rates, which has benefited a lot of folks. Now, if you are on the edge of, finishing out your purchase contract and locking your rate, that is going to be super helpful for you because you're going to save a couple of $100 over what people did just 2 weeks ago. All right. When we take a look at kind of the news, we had one report that came out that says higher rates suppress mortgage application volume. Well, that's kind of probably delayed and belated news, and that probably came in prior to the Wednesday reporting. I only say that because, again, as you can see on our bottom left, 30-year mortgage rates, you can see are definitely lower, where this average price has been bopping closer to the sevens, shade over, shade under. And then, of course, sharply lower inflation bringing Fed cuts into focus. Why is that important? Hey, listen, the Feds do not control mortgage rates. Those are traded out on the market. Watch your 10-year treasury. As the 10-year treasuries come down, which they have been sinking downward, then mortgage rates follow that because bonds improve. Mortgage-backed securities and bonds, those are the numbers you really want to watch. But the 10-year treasury gives you a very clear, even though they're not tied together, they do follow each other very close. And that is going to be super important if you are right on the cusp of, do I lock, do I not? Do I lock, do I not? That's going to give you an idea. And remember, rates in the morning are totally different than rates in the afternoon. It's on the stock market, man. It goes up and down. All right. But what has been happening with the market? Let's take a look at that. Now, if we pop this bad boy open, Freddie Mac says, hey, listen, man, our running 7-day average is 6.89%, which is super, super awesome. We got to like that. But then again, when we start taking a look at what's going on in the Northwest MLS, what's been our running 7-day average? Well, that's super simple. Like we said, we had a huge bump, like over 1,000 homes. Excuse me. They came on. We had 1,762 homes that came on market, and we had 1,257 that went off market. On Thursday, there were only 700 homes that came on market, and there was 1,050 that went pending. And then, of course, we see 1,134 that actually went sold. But hey, here's the real important thing. 1,086 properties went and reduced their price. Okay, that is a big number. Those are sellers or agents who bought listings, not literally buying listings, but overinflated a price to incentivize the seller. And unfortunately, the seller did not reap the benefit of that. Or a seller said, hey, I have sentimental equity in my house, and which carries no value, but I'm going to throw that on top of my house because that's the price I want. And the market is very clear. Buyers are super, super smart, and they will clearly tell you what your home value is. Because remember, a seller is a price taker. The buyers in the market create the value. They are price makers. Regardless of what you think your home might be worth, the buyers will tell you exactly what it is worth. And that's a business decision you get to make at that point. Just keep that in mind as you're pondering price. All right. So if we pop back here and then we take a look at what we've got as far as information, which is always super accurate. So remember to share the information. It's free. There's no marketing here. And let's talk a little bit about the Northwest MLS. Now, as you can see, the blue line is what has come on market, and we saw that significant drop off. And the pendants, that's the red line. That's been rolling around. And then, of course, we saw and have been getting more in as far as more inventory. And that's why that light green line is a lot higher. We are significantly higher, significantly as in we have 12,000 and change homes versus 9,000 and change. And that makes everybody super happy because there's more inventory for the buyers to take a look at. However, if you're asking, hey, George, if we have more inventory, excuse me, should prices go down? No, because we still don't have enough inventory, and we still have a massive amount of buyers out there that are still looking to buy their home. Andrew and Bridget, after almost a little over a year, finally got their home after lots of trial and error, and it was super awesome. So congratulations to you guys. However, there's still a massive pent-up buyer demand and still not enough homes, for them to look at. But affordability is probably the biggest takeaway with rates that have come up to normal interest rates that people are still adjusting to. And we've seen about a 4.8% increase in value versus, what we have seen in, the last couple of years where we saw double digit. But we're not going down like some markets are starting to struggle a little bit. Not uncommon. All right. So when we pop back here and we take a look at the average for sale price, which is the green line above, and the average sold price, which is the red line down below, you can see on the chart there where we put the arrows, June of last year and June of this year, you can see basically where we're at. And if we blow these numbers up, we can see that our average for sale price actually is still down about 3.5%, or roughly about $37,000. But we've seen an almost 10% increase in price. Now, what's super interesting is on the lower chart there, you can see that we are up $39,000 from where we were at 2 weeks ago. And that is, again, a really big deal because we're still seeing that average sold price continue to tick up, and up, not in massive steps, but in little increments. And that just continues to tell us that our market is still heading in a positive direction as predicted and will continue into 2025. Mortgage rates, are going to have, without a doubt, the biggest impact on our market as our inventory continues to grow. Now, some people will say, George, dude, you just said 12,000 homes versus 9,000. I said, yes, that's a lot of homes. No, we should be at like 20,000 homes, 22,000 homes. That would be normal. 18,000 homes was considered, having a lesser market inventory. 20,000 homes would be a very common number of homes this time of year. Just saying, we're still low, but getting better. All right, because we're only at, I think in King County, we're like 1.8 months of inventory for residential. Snohomish County hit like, I think 2 months of inventory. And that is getting, I think the 3 months, 2 to 3 months is going to be our new average. We haven't seen 3 or 4 to 6 months, which they say is the average balanced market for inventory on at any one time. We haven't seen that in over 10 years, and I'm not foreseeing that one anytime soon. Anyway, as we kind of move on, let's take a look at our chart here. All right, So we can see our big happy face. Let me blow that up for you. We see our big happy face there with inventory with 12,000 and change homes. Solds, as you can see, are up almost 1% year over year. That's a big deal because we've been in the negatives for a long time, and we've now crossed over. We went over not to the dark side, but to the bright side of things. And then, of course, our pendants are up, 1.1%. Now, when we take a look at it for the same time period, the same month of July up to the 12th, since today's the 13th, you can see that we're up 31%, almost 32% on the solds, and we're up almost 10% on the actual pendant homes. Super, super valuable, because even though June was considered a seller's market and just barely, our numbers were neutral. Our average for sale price actually was just down a shade by 2.5% year over year from $1,038,000, from $1,065,000. And then it was down, from $1,049,000 as a average for sale price, as we see. Now, when we come in here and we take a look at the average sales price and a median sales price, we were up 8% from June of last year and down 2% from last month. Median up 5.5% and, down 0.7%, from last month. So again, those numbers, as we take a look at where we're going, are we seeing healthy numbers? Yes, even though we have seen that was a massive increase on homes that reduced their price. That's a big number. I'm not used to seeing a number quite that big, over 1,000. Seeing 78 to a couple hundred, sure, that's pretty normal. It just tells us that sellers or listing agents are being just too aggressive for what the buyers in the market are clearly stating it is going to be. All right, let's move on. Let's take a look at some new construction here. All right, so as we move over, so 2 weeks ago, for the month of May, when those numbers were there, so I guess actually more than that, it was about 30 days ago, you can see that, we saw just a marginal decrease in active, which is the blue line. Red line, we saw, it was relatively neutral, right? So then when we pop over and we take a look at our new numbers, and we can see that both the average list price that is available and the average sold, well, those struggled a little bit. And as we take a look at it, we can see that even though our pended, price, our sold price, I should say, went up 4.5%, what's super interesting is even though we're struggling a little bit on sales for new construction, look at the significant bump in price. We were $925,000 average sales price 2 weeks ago, and we're at $1,019. That is amazing. And all things considered, when you take a look at where we're going and how we're trending, a lot of that had to do with month-end sales, interest rates coming down, and then some builder incentives, and that had a huge, huge, huge bonus to a lot of buyers out there, especially month-end stuff. And those are the numbers that we're seeing. So if we pop over and we take a look at what's going on today, let's blow that bad boy up. All right, now you can see that our inventory is higher than what we've seen over the last year. But look at now the average price or new homes coming on market, which is our blue line. So our inventory, the number of homes coming online, dropped off. And the number of pended, which is the red line, those also dropped off proportionately. Why? Well, because one affects the other. Super simple. Now, when we take a look at our numbers here and we take a look at, hey, where are we at, all things considered? If we blow this up, you can see that our sold prices or our number of homes sold are down basically just a little over 2%. And we're down 5.5% on the number of actual homes that went pended. Now, 2 weeks ago, that was 3.5%. So we're starting to see a little more gap. And some people are like, dude, why? Why is that happening? The new construction is, still a little bit more than 11%. It's like 12.5% more than what, the overall inventory. And that's a good number. Okay, I buy into that. But you have to understand, with more options for buyers, they're not really kind of forced into new construction because of the incentives and everything else. There are more homes out there for them to look at, and they don't have to pay the new construction premium. That's why builders are offering a few more behind the scenes incentives that you can capture on, especially at month end, but you have to work with an agent that knows how to ask the right questions. Make sure you're asking and only working with a buyer broker that knows new construction, knows the plats, knows how to get you those incentives. If not, you're probably going to leave about $10,000, $15,000, $20,000 on the table. Just saying. All right, moving on. When we, hang on a second, let's pop that back open. When we come over here and we take a look at bank owned super funny today. Oh my gosh, I can't believe this. We have a massive amount of what we call the wall of shame. I stopped counting at 17. I couldn't believe it. So it says that we have 67 homes, REOs that are bank-owned homes on the market right now, and there's not. There's actually only 50, which means that we have only seen a 6% increase or a 3-home difference, and that is super, super crazy. Now, when we take a look at where we were at, a year ago, you can see all of our numbers are down, for the same month of July, hence our big happy face. And, when we take a look at REOs or bank-owned homes as a whole, minus the agents on the wall of shame for not paying attention and really doing a disservice to their clients. Unfortunately, the however is our numbers are way down. We are like talking negligible numbers. And in fact, if I were to have shown you the map, you would see there was just a smattering of homes, because those numbers that you see there, that is 3/4 of Washington state. That is a massive area. And so the good news is we have seen, again, that reduction in overall volume. And foreclosures are not a great, hey, I'm going to buy a foreclosure because I can buy them at a discount. No, you can't. I don't know how many times we got to tell people this. Listen, we don't have enough homes for you to get a discount. So they're getting market value. All right, well, fair enough. And yes, even banks are sometimes succumb to, oh my gosh, I think I can get a better price. And the buyers are super smart. Just telling you. And in fact, there's a takeaway in the perception with some buyers. They won't even look at a bank-owned home because of concerns of maintenance and cover-up and things like that. Shouldn't say cover-up, but anyway, maintenance. We'll stick with maintenance. Maintenance is a good word. All right. Anyway, so remember, as we do this and as we move forward, remember to smash that subscribe button. Share it with 2 people that you like and 1 person you don't like. And it's free. The best part is make sure you look down below. Leave your comments for us. But there's some really great information, including a mortgage calculator and 5 questions you should be asking when getting quoted mortgage rates, so you're getting a true picture and not being caught up in marketing. Remember that. All right. In the meantime, it's an absolutely stunning day out there. Hope you guys have a great weekend, and I will see you on the next video. Take care.